What's good, Tesla family? It's Ray J back with another video. And in this one, I want to break down what's going on with Tesla, SPY, Nvda, the QQQ, and a couple of other tickers. We'll break down what's going on with tomorrow as we have the CPI report coming out, not to mention the FOMC minutes and how all of this could affect the markets. I'm also going to break down some important things about that data when it comes to the Fed. Before I begin to down all this information, before I give you guys any price predictions for the markets and break down what the charts are suggesting, let me just mention a couple of things. I am personally not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Webull link, which is down below and in the description. If you sign up for Webull and deposit $500, you're guaranteed 20 free stocks. If you deposit $25,000 or more, you're guaranteed 75 of them. And the offer ends very soon, in just 3 weeks. Anyways, for Tesla, as you guys can see, this thing has been on a nice uptrend so far. But whether you want to make the claim that Tesla is a rising wedge or not, it's irrelevant at this point because the chart is still technically bullish. There's no sign of this thing breaking down in any way, shape, or form yet. And we look like we could try to push higher based off technicals alone. However, technicals are not sufficient because we have CPI coming out. So I think it's very important to focus on that. That's going to be the big highlight for tomorrow and the other pieces of data before I break down these charts and what they could be telling us. So what's happening with CPI? So CPI comes out tomorrow being Wednesday, April 10th, 2024. And at 8:30 a.m. Eastern Standard Time, an hour before the market opens, we have all this data coming out. Now, CPI year over year is expected to go up at 3.4%. The last time it came out, it was 3.2%. So we're expecting a slight increase. On top of all of that, we also have core CPI. We want core CPI to be around 3.7%, a little bit below what we got last time as well. That's going to be very, very important. Now, with all this data coming out, I'm expecting the market to make a big move. We're going to either gap up or gap down. Whatever happens is going to be very important for the Fed's policies and other factors like that. So I'm going to talk about some data, what it suggests about CPI, and then break down how things are looking for these in just a couple of minutes as well. I just want to mention that after CPI comes out at 8:45 a.m. Eastern Standard Time, we have Bowman giving a speech from the Fed. What they say could affect us to some extent. And then later on, we also have the FOMC minutes coming out. That's going to be very important too. Why is the FOMC minutes important? What is that? It's basically a report of the FOMC meeting, giving us more insights on the other Fed officials' opinions. So it's not just Jerome Powell, it's going to be more information about what the Fed is projecting, what they see for rates, and what they think is going to likely happen. That's going to be very important too. So expect volatility at 2 p.m. Eastern Standard Time as well, on top of CPI. So I'm going to talk about my projections for CPI a little bit later, but I want to talk about this right here. Right now, if you look at the chart carefully, you will notice that for CPI, and this is actually a chart of the last 12 months, you can see that there's been a slight decrease in core CPI. It's been consistently on a bit of a downtrend, and core is very sticky, but it's still on a downtrend. It's looking not too bad. So this suggests that there's a very good chance that when CPI comes out, okay, core is going to likely be very close to expectations, most likely, as it's very, very, it's been kind of stuck in this range. It's very contingent, and it's been stuck just like this. So this tells us that 3.7% is very probable for core. I'm not too worried about this. It shouldn't really fluctuate too much. This should be okay for the markets. But excuse me, guys, I apologize. But what really, really kind of concerns me, at least a lot more compared to core, is inflation year over year for all items. So why is that important for all items? We're expecting 3.4%. When you look at the data, for all items CPI, this went up in February compared to January. And there is a possibility it's going to continue to go higher as we're expecting. And that is not very good for the markets. That is a bit of a concern. And then when you look at data right over here, if you look at CPI versus crude futures, look at the connection right here, right? When we see the red line go up, the red line is crude, and then the blue line right here is CPI. Notice how they go up together, they tend to fall together, come up together, consolidate together, down together, up together, down together, up together, down together. Got a little spike right here before it came back down. And now crude is going up again for the month of April. Gas prices are going up. The price of a barrel of oil is going up. Energy is going up. So this is not the best of things for CPI. This is why we're expecting a slight increase. But this could also affect the different sectors out there. When you look at manufacturing prices, they went up slightly during the last report. So not the best of news for inflationary data. This tells us, in essence, that there is a risk of inflation for all items going up a bit. So you want to be very careful and very mindful of that. Now, when it comes to other factors right now, for the May 1st FOMC meeting, we are expecting a 97.4% chance that the Fed is going to keep rates the same and not cut during this meeting. We're not expecting a cut during then. But for the June FOMC meeting, there's a 56% chance the Fed gives us a 25 basis point cut and a 42% chance they keep rates the same. This one is going to change depending on CPI, in my opinion. If we get a decent CPI, if CPI is below expectations at 3.3% or below that for all items, okay, this is going to likely go up a little bit more, and this is going to go down as the market will be a little bit more excited for a potential cut in June. But if CPI is not 3.3%, but 3.4, 3.5%, above 3.5% or at 3.5% is not going to be too good. If it's above expectations, this is going to start dropping, this is going to start going up, and the market may have to kind of like price in the Fed keeping rates up for longer, high rates for longer, and that is bearish for the stock market. So you have to be prepared for this. It's going to have a big effect on Tesla, especially. Tesla is a stock, it's a company that is heavily dependent on interest rates. Never forget that. So all of this CPI data, it affects interest rates. And when it affects interest rates, it's going to affect Tesla's sales. Look at how much Tesla's sales changed in the last quarter. It's very important that Tesla is watching this. Tesla's going to be affected by this, and you have to be prepared for this nonetheless. All right? So for CPI, in conclusion, what I see is most likely core CPI is going to be very close to expectations, in my opinion. The last times it's been coming out, it's been fine over and over again. And it's very stagnant, if anything. It's on a very, very nice downtrend, very stagnant. Core should be fine, but I am concerned about inflation year over year. I don't know if we're going to get 3.4%, 3.3%, 3.5%. I'm not sure about this one. This one's tricky to predict. We are expecting it to be a little hot, and I think that because crude went up a bit, it's going to be hotter than 3.2%. So it's got to be around 3.3% or maybe like a little higher than that at the very least. It could be 3.5, 3.6% too, who knows? But it's going to likely be a little bit higher than the last time. I just don't know the exact number. That's why I think it's very important to be open-minded to anything. So be careful, guys. All this data is coming out, and then later on we have the FOMC minutes. So a lot of data is coming out for tomorrow. It's going to be key for the markets. A couple more things before I start talking about the charts. For the data right now, the market is still quite greedy, despite the fact that we have CPI coming out very soon. We're still seeing buyers defending us, especially at the end of the day. Momentum indicators are still at greed. Things are still quite greedy. The put and call positioning is going up as we're starting to see more puts being bought. And simultaneously, we have the VIX kind of dropping a little bit, but it's still on an uptrend. So the VIX is not officially sinking. It's not officially breaking out. We just have to wait some more time. Tesla had 103 million in volume. We saw some more buyers stepping in, and Tesla reached our price target. I said that Tesla could reach at least 177.6 to 178 today, and that's exactly what happened. We also closed at 177, so Tesla's showing some strength, and we're seeing buyers defend it as we saw the Chinese sales come out. The Chinese sales in March doubled. I made another video about them in the morning, so that's going to be very key. Goldman Sachs said that Tesla has a neutral rating, and also Deutsche Bank gave Tesla a buy rating, so we got some good ratings from big banks. Don't forget that the price-price ratio is also going up a little bit for Tesla. It's gaining some strength. We tend to see more volatility, especially on Wednesdays. We're green about 48% of the time. And we tend to see more green around 10 a.m., also at 2 p.m. Eastern Standard Time. So at this point, I think that with some interesting price targets from Goldman Sachs, Tesla did try to rebound a bit. But at this point, technicals are not everything, and the news is not everything. So let's talk about the charts. What do I think is going to happen to Tesla? Well, honestly, guys, I don't truly know what's going to happen because it depends on CPI. I can tell you this, though. Even though I can't make any promises, I can tell you that the chart looks bullish on Tesla. We have a nice double bottom-like structure. There's also this bullish divergence that developed right here. So there's a very good chance Tesla will try to push up to at least 180 to 182 based off technicals. Based off technicals, right? We have a nice, what my friends like to call a George W. It looks like a George W pattern. We're trying to push up higher. We have a nice bullish divergence and a nice uptrend that's been respected on the last couple of days. The chart looks bullish. However, nothing is guaranteed because it also depends on CPI. If CPI is a little bit harder than expected, at 3.5% or higher, it's still possible Tesla gets a rug pull and comes all the way down to about 170.5, even below that. It's still possible we get a rug pull. If we're bullish in the whole market and CPI is decent, Tesla could easily push up to 182. Technicals do favor 180 to 182 coming, but I'm not going to solely depend on that. I just want to say that technicals do show Tesla could go higher, but nothing's guaranteed with CPI. So we'll just have to wait and see. So I hope that's as clear as possible. Yes, the technicals look strong on Tesla, but CPI could change all of that. Core CPI is going to be fine, but CPI for all items I'm not too sure about. So I think the best thing to do is just be open-minded, be prepared, and keep this in the back of your mind. Now for SPY, I'm seeing something very similar developing. There's been some wild price action on SPY, right? We had this nice pump on Friday, came down, pumped again on Monday, and just traded sideways. Today it pumped and dumped and pumped again. All over the place. SPY is going back and forth and back and forth. Still quite indecisive in my opinion. So if we're bullish after CPI, okay, if we break past 520, we're easily going up to at least 522 plus, if not 524 all over again. And that's where the imbalance happens to be. 524, very close to that could be coming if we get a decent CPI. If CPI causes a rug pull, if CPI is harder than expected, SPY will easily fall all the way down to about 512.5. Okay, so a big move is coming either to the upside or the downside. In my opinion, the chart is still kind of stuck just under 520, but we'll have to see what the move is from there. With that being said, that's what I'm seeing on the chart, back and forth price action. We just want to be very patient as time goes on. But in my opinion, SPY and the QQQ are very indecisive. They don't really have a clear direction just yet. And they're actually waiting for CPI. So I think that that's going to be our main reaction point, and we'll see how this ends up pivoting the market. So I'm not going to give you guys the best projections for SPY and the QQQ, but I could tell you more about other tickers that have more clear directions. So for the QQQ, it's the same thing. Like if you look at the chart, guys, it's been back and forth price action for the last 3 days. That's the reason why I can't give you guys the best estimates on SPY and the QQQ yet, as we're just waiting for the data. I could tell you more about Tesla, as I told you the chart looks bullish despite, even though the CPI can really change that, but the chart looked different on Tesla. In this case, for SPY and the QQQ, they're very stagnant. They're very stationary. They've been stuck going back and forth for some time, and they're just waiting for CPI. If we're bullish after CPI and the QQQ, 446 is coming. For bearish, we're going to be sinking down to 436, and we're kind of close to the center of that. So the best thing I would say is be very patient and give this the time it needs. We're still range bound, so I think this needs more time, but I do want to note that there are changes coming. For Nvda has been on a bit of a downtrend, and the stock looks bearish right now. It looks very bearish. It's been downtrending quite a bit, so it favors downside. If CPI gives us a launch to the upside, we could tag 877 or so, then come back down and consolidate. If we're bearish after CPI, if we get a hot CPI, this will easily fall down to 830, if not 805. In my opinion, the chart's bearish, but it also depends on CPI. Even if we do get a good CPI, we could pop and then drop again. And if we don't get a good CPI, we could just drop straight up from here. So either we pop and drop or we just drop from here. Either way, the chart looks bearish on Nvda. Please keep that in the back of your mind. It's a different view from like SPY and the QQQ. For Aapl, it looks to me like it's trying to base at this 168 area. If we're bullish after CPI, 170.9 plus is coming. If we're bearish, it's going to be sinking down to 168 all over again. The chart is trying to bounce from a technical standpoint. I could see an attempt to get up to 170, but just to be safe, we'll have to wait and see what happens with CPI. So technicals do look like they look kind of bouncy on Aapl, like it's trying to push a little higher, but just to be safe, it's best to be patient and wait and see what the data tells us. All right. So that being said, that's my analysis of the main 5. Please note Tesla looks bullish from a technical standpoint. It looks like it could try to push higher. If CPI was not coming, this chart would still be bullish. But because CPI is coming, that's an external factor, so we'll just have to wait and see. But overall, I still have the same view. I'm not saying Tesla will explode, the market will explode or drop. I'm saying it depends on CPI. Technicals do show more potential upside, but just to be safe, we'll have to wait and see. For Palantir, we have a 23.5 as resistance. We also have support all the way down here at 22. We're kind of stuck going back and forth and back and forth. So we will see what the big move happens to be. Also, if you look at the 4-hour time frame, we're showing some weakness. So this does favor a move to the downside a bit more, like it's going to fall to 22. Technicals do suggest that. We'll see if CPI causes either direction. CPI does favor pretty much anything, but Palantir does, in terms of its own chart, it looks a bit more bearish to me. For Supermicro, the chart's bearish. Just like Nvidia, it looks like it's going to be testing 880. It does favor that, in my opinion. But the chart is not everything. It also depends on CPI. If you get a decent CPI, this could easily push to 920, then 950. If we get a hot CPI, it's going to be falling easily to about 880 a share. Overall, I'm sorry, not 880, 873 is going to be favored, very close to that area. This chart is bearish, however. It does favor a move to the downside and a bounce after that, but I'm not going to promise anything until we see CPI, so we'll have to wait and see. But the chart looks more bearish on Supermicro. Rivian is in a very, very critical position. We're testing the 50 EMA, the yellow line you see right up here. We're testing that right now. If we're bullish and we break through that, 11 is coming. If we're bearish and we reject, we could be sinking all the way down to about 1020. So we'll just have to wait and see. Otherwise, we're kind of stuck. We are looking a bit more bullish on the 4-hour time frame. So we'll wait and see how it goes. But for now, Rivian is attempting to push higher. It does have some potential, but it depends on CPI, of course. The chart does show some life, but we have to be a little bit more patient. SoFi looks bullish overall. We have a nice inverse head and shoulders like structure, and we're trying to approach 8, in my opinion. I could see 8.25 coming in higher levels like that, like the imbalance fill. The chart on SoFi looks bullish, but the chart's not everything because it depends on CPI. If we ignore CPI, the chart would be bullish, so we'll have to see what CPI causes. Do we come back down to 7.73 and 7.5, or do we break out into the 8s? It depends on CPI, of course, and other factors like that, so we'll have to wait and see. On AMD, we're completely indecisive. If we're bullish, 175 is coming. If we're bearish, we're going to be sinking to 160. We're kind of stuck right now, so we'll have to wait and see as well on this. For ARM, we're looking a little bearish right now. If we end up sinking, we're going to be coming all the way down to about 124.5 or below that. If we're bullish, we're going to be pushing for 130. We are looking a little bit more bearish on ARM. The chart does favor a move to the downside, but nothing's guaranteed until we see CPI, so we'll wait and see what CPI causes. I do want to note that there's this big wick right here, a nice liquidity grab before it started to come down. The chart looks bearish. It looks like it's going to drop a bit more, but just to be safe, we'll have to see what CPI causes. Coinbase has had key support at this 240 area. If we get a rug pull, we could be sinking all the way down to 236. If we pump, we're going to be coming back up to at least 252. In my opinion, we're kind of stuck right now in this range. So give this the time it needs. We'll see what CPI causes. For Amzn, we're on a very, very strong uptrend. The chart is bullish. But if CPI causes a rug pull, 182 is coming. If we start pushing higher, 188 is coming. I'm in the middle with Amzn, but I do want to note that the chart is bullish. So we'll give it some more time and see what CPI causes. For Meta is looking a bit more bearish on a bit of a downtrend. We're going to be looking to see if we lose 507. If we lose this, we're going to be coming all the way down to at least I would say 500 and 496 if we're bearish. If we're bullish, we're going to be pushing all the way up to 530 again. We're kind of stuck right now, so I'm going to give it some time. We do look a little bearish on this trend, though. It does favor a move to the downside, but just to be safe, we'll wait and see. Microsoft is very indecisive. If we're bullish, we'll watch 428. If we're bearish, we're going to be coming down to 422. Kind of stuck and indecisive. I'm going to be patient with this one. It's kind of stuck. For Google, we look bullish. It looks like 160 is coming from a technical standpoint. If CPI helps, 160 is easily coming. If not, 155 is going to be coming. We're going to get a little rug pull to 155 or 153. I'm open-minded to anything, but just know that the chart looks bullish from a technical standpoint. Finally, we have the VIX. It is on an uptrend right now. We like to bounce off our 50 EMA. So will we get a big bounce in the VIX if the market gets a rug pull, or is the VIX about to collapse? That depends on CPI, so we'll just have to wait and see. And I'm seeing the same thing on the dollar index. The dollar has a potential double bottom-like structure. If we get a bounce off this and we break above 104.28, a bigger push is coming, and this would be bearish for the stock market. If we lose 103.98, a bigger drop is coming, and this would be technically a little bit more bullish for the markets. So we'll see if this thing gets a big bounce to turn bearish for the markets or not. There is a possible double bottom-like structure, and it does look a little bullish to me, which suggests that there could be a rug pull coming. So I'm open-minded to anything when it comes to the market. SPY and the QQQ are quite indecisive. Tesla looks bullish from a technical standpoint, but anything could happen depending on CPI. So I'm going to be very patient. I'm going to give the market the time it needs, and we'll see how things go for tomorrow. I will see you guys tomorrow morning, guys. Thank you all so much for listening. Have an absolutely incredible rest of the day. I'll see you guys tomorrow before the market opens. Thank you for listening. Have a great day. Tesla the market to the moon because the long term is still incredibly bright. No matter what happens with CPI and the short-term data, I am still a very, very big bull for the long term for Tesla. For the short term, I'm just going to wait on CPI and see how things go. So that being said, thank you for listening. Have a great day, guys, and peace out.